Fears over the coronavirus outbreak and an oil price war are rattling Wall Street traders and shaking the confidence of millions of people who've invested their life savings and company 401ks into the stock market.
Joining us with important advice for investors is Mark Kennedy. He's president of Kennedy Wealth Management, author of a new downloadable report titled How to Protect Your Life Savings from Catching the Coronavirus. Good morning. Thanks for being here. Stock market been all over the place, giving people indigestion, if you will, to put it mildly, a lot of people. So the question is, because of the uncertainty and the panic caused by the coronavirus, what should people do? When we talk about millennials, middle-aged Gen Xers, what should they be doing in the market? Should they be investing, selling, or being cautious at this time?
Great question, and I think it's a different answer for different age ranges. But what I would say is the World Health Organization this morning just declared this a global pandemic for the coronavirus. That could have future ramifications on the market. So I don't think that this is over yet from what we've seen. So I think that if you're a younger investor, say like a Gen Xer or a millennial, I would continue to put the maximum into my 401k plan at work. And I really wouldn't be too worried about this, and I would actually go more aggressive because you can buy stuff now at a discount, which is great because maybe you have 15, 20 years until retirement. Somebody though that's more approaching retirement, you really need to deleverage your risk. We had a gentleman come in the other day, 75 years old, 90% in stock, and out of those stocks, 90% was in one stock. So I think you need to be well diversified, but even more if you're an older investor, you need to have some guaranteed income solutions also within your portfolio. And the one thing I'd also say too is if you are in a 401k and you're still working and you're nearing retirement, many plans today have something that we call a brokerage window that can be available to a client, and they can actually go to outside managers, bring those outside managers into the plan without having to get permission from their custodian. So a lot of people say, I don't know what to do with my money in my 401k, and nobody's really helping me out. And this is a great way to get help from outside management. So that's some things that we have available too for our clients.
When you talked about that, was it a 75-year-old person who came in?
Right.
That concerns me because it seems like they should have set up their portfolio 3 weeks ago or years ago to withstand this sort of a thing and to have it allocated such that there's very little risk at this point in their lives. Isn't that right? So if that person's coming into you with 90%, isn't it too late?
Well, it's not too late, and we're talking to him about deleveraging out of some of that. But the thing I would also say is a lot of people sometimes like to do it themselves, and this is not the kind of market you want to do it yourself. You really need to find somebody that specializes in retirees and people nearing retirement. We do at our firm, and you need to make sure that you reposition that money so that it lasts you for the next 20 or 30 years. This is going to be a temporary thing, maybe a year, year and a half. The market will come back eventually, but if you're 75, you don't have that kind of time available to wait for the market to come back. I know back in 2000, when we had the big crash because of the tech crash, it literally took 14 years for the market to come back to the high of 2000. So you would have flatlined in the S&P 500 for 14 years because you would have had another correction in 2008. You don't have that kind of time if you're 75 years old.
Yeah.
Some people feel nervous about the fact that if they were to become infected with coronavirus, that they'd have to take time off work or even a self-quarantine, right? It's 2 weeks.
Right.
They wouldn't be able to do that. What is some advice for folks if they had to be away from work for an extended period of time?
So what I would first tell people is if you can all avoid it, do not take a loan from your 401k plan because that can be very expensive, and plus you're doing that in a potentially down market. The second thing I would say to that is that you need reserves. So I always believe you need at least 3 to 6 months reserves. And I know some people live paycheck to paycheck, but you just have to find a way to put some money away every month, whether it's $20, $50, $100, you need that reserve because things like this happen, emergencies happen. Now, if you're covered by, your work health plan and you have vacation time, then you'll probably be okay, but some people don't. So they really have to make sure they have a reserve account.
Getting back to what you said a moment ago with the young person, you said be aggressive and buy. Is that something that would apply to all of us?
No, I think that if you're, again, 10 years or closer to retirement, you really need to look at an approach where you're deleveraging, a lot of that money out of the stock market, more into a short-term bond portfolio or to other strategies like annuities that can provide you lifetime income. But you really need to be working with a competent advisor that understands retirement planning because it's a totally different way to plan people than younger people. So I would say it's almost like going into a doctor. You have a general practitioner, you have a specialist, and you need to work with a specialist that specializes in retirement and retirement planning.
Okay, Mark, thank you so much. Mark Kennedy is president of Kennedy Wealth Management in Calabasas. For more information, you can check out their public email.
And also download our free report. So we have a free report we put on this. It's called coronavirusinvestingstrategy.com. So coronavirusinvestingstrategy.com.
All right. Thank you so much.
Thank you.
Appreciate it.